back, people. Hope you're kind of enjoying the learning so far and ready to get deep into it even more. So now here in this section we're going to learn about how one should be approaching stock market, right? And especially when it comes to investing and trading, right? Many people believe that investing is good. Many people believe that trading is good. So here my objective is not to say one is better or one is bad. That's not the objective. The objective is that you get to know what are both, and then consciously choose trading. I'm not saying investment is good or bad. Neither am I saying trading is good or bad. I'm giving you option of both, and you can consciously choose one of those so that you can approach it in that way. So let's kind of jump on. All right. So now, both investment and trading, they have their own nuances. What are those nuances? The first and foremost, with respect to the view, the market view, what one has to have when it comes to investing. When it comes to investing, it is always one-sided, right? Whoever is investing in the market, they always want markets to go up. Because why? In investment, you can only buy. You first buy, say for example, you buy a share or a mutual fund, or you invest your money in some bond or some kind of a stuff, right? And once you buy, you want that particular script to start scaling up. Say for example, you buy, say, Reliance shares or Tata Motors share or Maruti share or something else. And once you buy, you want it to go up. So you only have a single-sided view or a one-sided view when it comes to investing, saying that you would want the market to go up. Now, when it comes to trading, traders typically have two-sided view, which means traders look at in trading what is going to happen to the market and what is happening to the market now. Is it going up or coming down? Either side one can trade. When it comes to trading, either side one can trade. Now, what does it mean? If the market is going up, also you can be participating in the market, and even if the market is falling down, you can still participate and make money in trading. That's the first understanding. So in a view, market view, both-sided views is in trading, and only one-sided view is in investing. Now, with respect to the money and returns what you make, price always has to go up for you to make money in investment. If the price falls, investors lose money. Whereas when it comes to trading, it really does not matter whether the market is going up or coming down. Both the ways one can make money in stock market. That's the beauty about trading. Now, how does it happen? You'll all learn about that in the subsequent section of how to really make money even when the markets are falling. If you're new to the market, this may be intriguing, or this may create a curiosity. Yes, this is reality. Even if the market falls, traders make money. Especially when the markets are falling, investors lose money. If you bought a share at, say, 200 rupees and you want it to go up, but on the contrary, market starts to fall, what happens to your trade? Your investment value comes down. Whereas if the markets are falling, traders make thick and quick money in the falling market. How do they make it? That's a big concept, which I'm going to talk about that in a bit in my subsequent section, where you will learn how to really be in the market and still make money when the markets are falling. Right? And that's a beauty what can happen when it comes to trading. But in investment you got to either get out of the market when the markets are falling. You simply cannot sit there waiting for it to come up, because by then your capital may completely get eroded. But trading, you can kind of change your view and also make money when the markets are falling. And finally, what kind of trades? In investment is only long trade, and in trading you can do both long and short. So what is this long and what is this short? You're going to learn about that in the subsequent section, where I'm going to discuss detail about what really long trade means and what really short trade means, and how do you kind of really manage both of them. For now, just to kind of understand, long means to buy, short means to sell. Long means, in stock market terminology, long means to buy and short means to sell. It does not mean that in investment, if you have bought, you cannot sell. You can sell. Whereas in trading, apart from buying first and selling later, you can sell first and buy later. Yes, people, it can be done in trading, and that is called a shorting. How to do that? What is it all about? We're going to discuss that in length in the next coming up sections. Now, what are the instruments you kind of really get into when it comes to investing? Most of the investments, equity, bonds, mutual funds, unit linked, all of that you can kind of do it. But in trading, apart from all of those things, you can also deploy your money in derivatives. In investing, you cannot deploy your money in derivatives, because derivatives, you cannot kind of simply once buy and keep quiet. No, it has to be managed in a certain way. Unlike equity shares, you can buy and simply forget about that for the rest of your life if you choose to, and even pass it on to somebody else. But that cannot be done when it comes to derivatives. So in derivatives, you have to manage it like a business trade. So that's what happens in trading. So now looking at this people, both have their pros and cons. I'm not saying one is good, one is bad. What is most important is you got to understand what are the facets of both, what suits you, and how can you even combine both. Some aspect of your money you should deploy in trading, some of your aspect of your money you should deploy in investing. And once you do that both together, that's the right way to kind of be in the market. There is no one way, but that's the right way. And within trading itself, there are many ways. So first you become a trader, generate money, and once you generate enough money, then you can kind of deploy that as investing for a long term in some of the good scripts, and that can kind of generate huge amount of wealth. So this is what it means to invest and to trade, right? So I hope you kind of got this concept about what is this investing and what is this trading, and how it kind of really impacts. So we're going to go much deeper in both of these things and understand how to really invest your money in stock market. We're going to cover that as well as part of the entire curriculum, and also we're going to go very, very, very deep on trading, in every facet of trading, every kinds of trading, and also all the mechanics and on multiple strategies and systems as well. So that is all also going to be covered in the subsequent section. So, but this basic understanding is extremely important. So if you kind of got what is investing and what is trading, type in the comment, understand it, type in the comments, understood investing and trading. And I'll see you in the next video, where we will discuss about why do people lose money in the markets, right? We now understood how to make money, but it's also important to know why people lose money in the markets. I'm sure you're excited to know about that. I'll see you in the next video. Until then.